Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INR Bonds. I'm Arjun Parsati, and today's hot topic is what will happen to India if there is a contagion effect of China's real estate and debt issues. The Sensex and INR saw sharp rise today after yesterday's fall, while government bond yields remain flat. There's been volatility in risk assets and emerging currencies as markets are starting to wonder about China's debt issues. So, as we all know, there's been a huge couple of big real estate companies that have started to default on their debt in China, and that is affecting the whole financial sector in China. And the talk on the in the global markets is given that there's a huge amount of debt in China through various shadow banks and many other entities, and with local government debts also starting to hurt, the government is starting to clamp down on a lot of debt in China, and as well, and that is hurting a lot of sentiments in financial markets there. And what will the effect be on India, especially now, given that we are seeing a sharp rebound in economy and sharp rise in asset classes like equities post the COVID, uh, and so will and given this state where markets are at record highs, government bond yields at record lows, corporate bond yields too at record lows. That's for the highest rated category bonds and PSU bonds. Will there be any kind of volatility that we saw in the past many years? There has even been talk about China seeing a 2008 kind of crisis, which the US faced. All this, what will happen? It's a big question mark. The answer could be both ways. One is there could be, because of China, a lot of investors globally could have lost, may lose a lot of money as they have invested in Chinese assets, onshore and offshore, mostly offshore as well, to either directly or through various structures. And those losses that could bite and they could force them to take money out of emerging markets assets, which include Indian assets. Or it could also be that given Chinese issues, a lot of investors would start to weigh more of their portfolios towards Indian assets, which are much safer, more well regulated. And though we have had our issues, we seem to have handled a lot of debt crisis a whole lot better. Clearly, I mean, we don't see a huge debt contagion at this point of time on Indian markets, given where they are, and also, but there's also a case where, given the COVID, we have seen a huge amount of government debt, both at the state and central government levels. And would the market start to worry about that? The way the market seems to be moving, it seems to be that Indian markets are seeing more benefit from Chinese problems than risk, but it could change. So investors have to be careful and invest in the most fundamentally sound assets. Thank you for listening in. Don't forget to subscribe to our YouTube channel and come into INR Bonds Quick Invest to invest in the best and most fundamentally sound bonds at the most reasonable, at the best information, best price, and the most transparency. Thank you.